Hey, it's Larry Gonzalez with your housing market update for the last week before Thanksgiving. Not a lot of economic news yet. We did see a lot of movement in rate this week, but let's go over what we did learn looking at a few different housing reports that came out, all right? So prices are steady right now. Inventory is steady as well. I expect to see inventory go down a little bit. It typically does until January. Rates went up this week. Not a lot, but they went up. And that was actually what I expected, and that's what I said would happen last week. So headline news, hey folks, there is no housing fairy. We're not sprinkling new homes anywhere right now. It's been a slowdown. It's some great news. Your grandpa and your grandma can buy a home. That's not good news for us youngins. And then the other one is continuing jobless claims. They are actually continuing to rise, and that is a good thing for future rate cuts, possibly. All right, so let's look at home builder sentiment. It gets better for the third month in a row. Home builder sentiment across the country has gone up. Builders are not positive yet, but it's getting better. So 3 months in a row, all three index components went up. Current sales expectations, future sales expectations, and buyer traffic all went up. So that's great news. And I think a lot of it has to do with prospects for reduced regulations post-election are a big cost for this increase in sentiment. I do caution that if rates continue to stay elevated, that doesn't not only hurt home buyers, that hurts home builders, because with higher inflation, with higher rates, it costs more for labor, it costs more for supplies. All right, so those things kind of hurt the builder. So we'll see how this progresses, but it'd be nice to see the builder sentiment improve. Builder sentiment improves. They build more homes, and we need more homes. Let's take a look at home ownership. This is something that came out this week. Benefit of home ownership. I've shown these numbers before. The difference, the delta between the net worth of people who rent, who are renters, and who are homeowners, it has steadily gone up over the course of the last 5 years, and we are now, it's up 42 times more. Homeowners are 42 times more net worth than renters, right? And let's put that in the numbers here. A homeowner has a net worth, and this is average, $415,000. A renter has a net worth of $10,000. That's scary. And you want to know why I believe in home ownership? Home ownership has changed my life. It's changed the lives of many of my clients and my friends and my family. But I also have family members who have been renters for their entire life. And guess what? Some of them don't have anything. They don't have anything except maybe a paid off car. So just something to think about with home ownership. Do you want to be a homeowner or do you want to be a renter for the rest of your life? For me, looking at these numbers, I tell you what, I think I want to be a homeowner. Let's take a look at new home construction. Builders pulled back in October, and it's no surprise with the hurricanes that we had through Florida, Georgia, North Carolina. Home builders said they stopped. All right, a lot of stoppage. But that said, we look at this month over month for completions, minus 4.4%, up 16%, almost 17% year over year for completions, 1.61 million. That is great. We need over 1.5 million new homes built every year to meet the demand. I don't even think that's enough. And we're not going to see it, but this number here was good. But I would also say that there was a huge delta last year in new homes being built simply because of the economy going into the end of the year. The less supply of future homes over the course of the next couple of years will help to buffer home prices and keep those home prices steady. Let's take a look at existing home sales. We had a strong rise in October, and that's no surprise, people, because guess what? Interest rates dropped July, August, September. So those people sold or bought homes in October. So you saw this huge rebound, 3.4% increase month over month, plus 2.9% year over year. This is the first increase in existing home sales that we've had in 3 years. So that is saying a lot. Now, the supply of homes, 4.2 months supply. Why? Because we sold so many homes because rates came down. That's where the demand is. There's so much pent-up demand. Once rates come down, you're going to see people buying. All right, median price of homes up to $407,000 from $405,000 a month ago. Hey, that's not a lot, but you know what? That's pretty good. That's a good direction to be going in. All right, 29 days on market. That's the average. Well, I tell you what, that just means that Homes are staying on a little longer, but if the home is priced right, it's going to sell. Inventory up 0.7% month over month. So we got 1.37 million existing home inventory. So that's good. We're seeing this continued growth in inventory across the nation. We're certainly seeing that here in Hawaii. Now let's look at first-time home buyers. 27%. It's up from 26%. All right, cash buyers 27% down from 30%, and then investors 17% up from 16%. So the mix of home buyers is kind of swaying back to first-time home buyers. So that's good. But now let's look at who those first-time home buyers are. All right, this is I love charts. This is scary, folks. First-time home buyers. 38 years old is the median age of the first-time home buyer. It has gone up from 30 in the 80s and much of the 90s now to 38. And there's a lot of reasons why. We'll get into that here real quick, just kind of right out the gate. All right, kind of 5 reasons why first-time home buyers median age is 38. That's high. That's like that's not my age. I'm a little older than that, but still. All right, why is that? Hey, delayed milestones in life. People are staying in school longer. People are not getting married until later. They're not starting a family until later. They want to get their own economy stabilized. Rising home prices. Okay, we've seen that the rise in home prices. If you're not a VA buyer, you have to save more money now. The increase in home prices has outpaced the wage growth. So you have to save more as a first-time home buyer to have enough money to buy a home. And I would say a lot of this also has to do with education, but rising home prices is certainly one reason. The other, high levels of debt. All right, we are at record high levels of consumer debt, but we also, the millennials, student loan debt. All right, that all gets computed into the DTI of a home buyer, so they're not qualifying for as much as they need because of this excess debt that they have. The fourth thing is changing lifestyle priorities. A lot of people they don't want to buy a home. They want to travel. They want to maintain that nomad-like existence and have more freedom and spend their money on things that they're going to enjoy. They want those short-term, that short-term satisfaction of traveling Europe or of maybe starting a business. So they're changing their priorities in life. And then the last one is economic uncertainty right now. I would say that is a good reason. And I talked to many home buyers or potential home buyers who were saying, you know what, I think I'm going to wait till the election's over. I just don't know how the economy is going to go. Well, the election's over, folks, but there's still a lot of economic uncertainty. We see it every single day right now. There's just a lot of volatility. So those are really 5 reasons why that age of that first-time home buyer is now 38 years. And check that out. Repeat buyers is 61. Grandma and grandpa, they're the ones who are buying homes. Maybe they're the ones who are downsizing. Okay, I see that a lot as well. So just some interesting factoid news I just wanted to share with you on who these existing home buyers are, who they are. They're not that typical 20-year-old, 21-year-old, or 30-year-old that it used to be. All right, they're a little older now. All right, let's look at initial jobless claims. Initial claims are down 6,000 last week, down to 213,000. So that's not really good news. But continuing claims went up 36,000 increase in continuing claims. People are staying unemployed longer. All right, up to 1.908 million people who are receiving continuing unemployment claims. That's the highest number we've had in 3+ years. So we need to get over 2 million. I think if we get over 2 million, then I think the Fed is going to say, you know what, we need to lower that Fed funds rate, and that may help us in the interest rates for mortgages. But the bottom line here is nobody wants to fire their people. People value employers. They value their employees. But once those people lose their jobs, man, it's tough. It's tough. Although there's a lot of jobs, people just don't want those kind of jobs. All right, let's look at mortgage rates, VA rates. Hey, I said this last week. I've said it actually the last couple weeks. This week and probably most of next week, we'll see interest rates go up, and that's what we saw. We did see them come down a little bit, but that was a world event. That was basically Putin kind of laying down the law and changing their decision on when and if they will use nuclear weapons against Ukraine and, quite frankly, against us. That we saw interest rates dip a little bit at the beginning of the week, but they've actually since gone up, and we are closer to 6.5%. than we've been in really a few months. So, or actually at least a month. So we got to keep an eye on this. Next week we have the PCE. That's a personal consumption expenditure report. That's the Fed's favored measure of inflation. We didn't really see any good news this month on inflation earlier this month with the CPI and the PPI. So we'll see what happens next week. Not going to hold my breath on that. The following week we get the jobs. This jobs week. That's where we're going to see a lot of fireworks, methinks. All right, so let's go. What does this all mean? Hey, you know what, people? The election's over. We had a 2% increase in applications last week, up 1% year over year. Second week in a row, we've had an increase. Refinance activity was actually up last week, 2% as well, and still a 43% increase year over year. Sellers, hey, there is more inventory now, especially in Oahu, than there has been at any time since before COVID. Depending on the part of the island you're at, you're probably going to be, your house is going to sit unless you have it priced really well or you're giving some seller credit. So that's what I'm seeing right now. I'd say 75% of my clients are getting a seller credit of some sort. That's all I have for you this week. I hope you have a great weekend. Stay positive, stay safe. All right, aloha.